Hi everyone, it's Mathis Connor here with Connor Management Group, and this week we're going to look at the best securities brokerage stock to buy right now. Today is Thursday, April 24th, 2014. And here on our opening slide we see that this company, the industry, is the Securities Brokerage, and we have a 12-month upside potential of 27.7%. And just to familiarize yourself with what we mean by securities brokerage, we're talking about companies like E-Trade, Goldman Sachs, Interactive Brokers, Morgan Stanley, Charles Schwab, TD Ameritrade. These are companies that make markets and different kinds of investment products. And going on to the second slide, we see that the company that we're talking about is none of the ones we just mentioned, but it's the Intercontinental Exchange Group, also known in the industry as ICE. The ticker symbol is ICE. The industry is Securities Brokerage. Once again, we see the 12-month upside potential at 27.7%. ICE has been getting a lot more just press attention as of late because in October of last year they bought the New York Stock Exchange as well as all of its subsidiaries. So they were already a high-profile company, but their popularity and notoriety is definitely just gone up a bit as of recent. On to the quick facts slide. The business summary, we have Intercontinental Exchange Group operates a network of regulated exchanges and clearinghouses for financial and commodity markets in the United States, the United Kingdom, Continental Europe, and Canada. The company operates marketplaces for trading, including a range of securities and derivatives contracts across various equity classes, including interest rates, equities, equity derivatives, credit derivatives, bonds, currency, and commodities. So that gives you a good feel for just how broad their offerings are. Let's see. I have another description here that should help out a bit. Let's see. Yes, the Intercontinental Exchange owns and operates the leading global electronic marketplace for trading both futures and over-the-counter energy contracts, and the leading soft commodity exchange. Now that was basically ICE's focus before the acquisition of the New York Stock Exchange. But just to give you a feel for kind of the things they cover, when they say soft commodity exchanges, those are contracts like cocoa, coffee, cotton, and grains. But they also trade a lot of energy and futures contracts as well. So that was ICE's specialty before the acquisition of what was called NYSE, New York Stock Exchange, Euronext. Additionally, we have Intercontinental Exchange, was founded in 2000. It went public on November 21st, 2005. And that's pretty much the relevant points there for, I guess, the opening description on ICE. The website is www.theice.com. The company is headquartered in Lake Forest, Illinois. Actually, that is not correct. Excuse me. The company is headquartered in Atlanta, Georgia. They were founded in 2000. The number of employees they have is 4,232. Once again, the ticker symbol is ICE. They're in the financial sector, and the industry is securities brokerage. The annual revenues for ICE over the last 12 months was $1.7 billion. Their net income was $254 million, and their cash from operations was $735 million. The market capitalization for ICE yesterday stood at $23.7 billion. So definitely a sizable company, or at least a pretty cash-rich company, that's for sure. On to the products and services page. We don't really have too much here. We've got a photo of the ICE logo of the New York Stock Exchange company of which they recently acquired, and we have a big picture of just different items of which they make markets in. For instance, we got one big picture with a mosaic of smaller pictures of an orange, of coffee. They make markets of coffee and cotton. There's a transmission tower and electricity and grains and currencies. There's a picture of sugar cane here as well, and interest rates. So they make markets in a lot of different goods. Their 2013 revenue mix, there's a graph here showing that in 2013, 44% of their revenues came from derivative contracts, different, futures and options and the like. Next in line after that, 16% of their revenues was in tech services, and the other 14% was in market data. I'm including this here just for reference, but with the acquisition of the New York Stock Exchange, their revenue is going to about double. So this mix will change, and it has been changing. On to the metrics slide. Once again, the annual revenues of the last 12 months was $1.7 billion. Their net income was $254 million over the last 12 months, and the cash from operations was $735 million. The operating margins in 2012 were 70.3%, and in 2013, the operating margins were 66.9%. Historically, the operating margins have typically been in the mid-60s, and just to let you know, the profit margins are reasonably high as well. They've been in the mid-30s, around 35% over the last few years. The trailing PE ratio, taking a look at the valuation metrics, right now it stands at 24.9, and the forward PE ratio, looking forward over the next 12 months, is 18.2, and that relationship implies that earnings by most analysts are expected to grow over the next 12 months, that's for sure. The PEG ratio is at 0.8. That's below 1. Usually is a signal that it's a good value opportunity to get in on. The price to sales ratio is a bit high. It's at 14.0. The price to book is at 1.9, and the enterprise value to EBITDA ratio is at 25.5. So we have a combination of some inexpensive metrics as well as some somewhat high metrics. Price of sales of 14.0, enterprise value to EBITDA. That's typically somewhat of a high number, but you kind of have to look at things in a historic context and also kind of recognize that when you see a number like that, it usually means a lot of cash. Compared to most companies, it generates a lot of cash for its size, which is definitely the case here with ICE. So overall, with the trailing PE higher than the forward PE, that raises an eyebrow to imply that earnings are expected to grow, and the PEG ratio being less than 1, that's also letting you know that this company has some room to grow price-wise. The recent closing price for the Intercontinental Exchange Group was $204.29. The 52-week low was $157.83, and the 52-week high was $229.50. So the stock is closer to its high than its low right now, that's for sure. The 20-day moving average is at $196.60. The 50-day moving average is at $204.77, and the 200-day moving average is at $199.47. All those numbers are fairly tight, and relatively, I'm not sure if those last three numbers tell you much. The average trading volume for ICE stands at 984,000 shares per day. The beta for the stock is at 0.9, so the stock typically moves with the market historically. The dividend yield is at 1.3%. Pays a dividend, but that's only something that they recently started doing. They only started paying a dividend in the fourth quarter of 2013. Similarly, the average dividend payout ratio is at 12%. That just started happening as a result. So those numbers will likely, we'll see if they go up a bit. On to the next slide is the price chart of ICE. And for the most part, the stock has just kind of steadily increased with the market. I mean, going back over the past year, the price of ICE has gone up 29%, so it's appreciated 29% over the past year. And it started out at the low we referenced, which is around $160, and it reached a high of around $225 back in January of this year, and it's pulled back a little bit to $205 where it is right now. So overall, the stock has done a somewhat steady increase. It's pulled back a bit since the beginning of the year, but overall, it's increased steadily for the year. Don't have too much more to add to that. Overall, on to the next slide, the financial statement quality of ICE. It's in excellent condition. Its debt is manageable, and its revenues are about to increase substantially. So, the past 12 months, the revenue's been at $1.7 billion, but it's expected to increase to about a little more than $3.5 billion by the end of the year. So that acquisition is going to increase revenue substantially. The operating margin trend, as mentioned, it's been flat. The price pattern trend has been steadily increasing. And this is in the face of a market that we see is having some bearish winds right now. Most of the kind of pullback we're seeing is in the NASDAQ, which is consistent with the overvalued names we've been seeing over the last few weeks. So as mentioned, the recent closing price for ICE is at $204.29, and the 12-month price target we have at $260.91, and that gives this company appreciation potential over the next 12 months of 27.7%. So, we believe that this is a good opportunity. Within the industry, things have been getting better. One thing that some analysts have noted is that the efficiencies of a lot of the securities brokerage firms have been increasing in the last 2 years or so, and that's mostly been a result of government regulations that have been related to the flash crash that happened a few years ago. And additionally, the economy is starting to, there's conviction that the economy is looking up. So you can imagine that, with increased efficiencies and a positive outlook with the economy, you can envision a lot more trading and investing activity happening, which would bode well for the Intercontinental Exchange Group. So overall, we believe that ICE, the Intercontinental Exchange Group, is the best securities brokerage stock to buy right now. And on to our last slide, just a reminder to sign up for our Saturday morning newsletter, and you get that by going to www.gmcstockpicks.com, and there you can hear about great investment opportunities like this one, as well as just other general investment advice and articles. And we came across ICE by using our proprietary algorithms, where we review, analyze, and rank well over 3,500 stocks every week using our proprietary algorithms. We rank these based on appreciation potential. So we rank the ones from the highest to the lowest, and in this case, ICE looks like it was a good opportunity, and we suggest you take a closer look at it. So that's all we have for this week. We hope this presentation has been helpful, and we'll talk to you again next week. Take care.